Stocks are slipping a little bit here as the Russell drags and the NASDAQ is now just a little change to the upside. Kevin Green joins us for a look at options, flows, and levels. KG, should we start describing this as failure to launch or what's going on?
We are seeing a little bit of exhaustion here, Oliver, for today's session. But once again, we still have these levels that we want to be mindful of, and the 5,700 level is going to be the key one to be able to hold, and it's been able to hold over the last couple of trading sessions here. What I have noticed today, and I've gotten a lot of comments around this, so I want to be able to clarify, there has been a lot of put flow activity happening over the last 3 trading sessions, and at first it kind of just seemed like it was a rebalancing from the quarterly expiration, but it does appear that we are getting a little bit more aggressive put buying activity going out into the November contracts, the November monthlies, as well as the December monthlies. And we actually just saw one that just came through here, Oliver, that kind of moved these markets. We had one that actually hit the 5950 puts. That was actually going out to 2026, but they're doing the same type of trade for November as well, that same strike. So it seems like there's still a lot of institutional positioning that's taking place, but more on the bearish side. And I think that's just kind of catching a lot of these market makers off guard, where we just really don't have that much trading activity in general taking place. We've seen about maybe 60% of the actual flow that we saw yesterday, which is not really a good sign. So we are having a little bit of a failure breaking out of that channel once again, and we are seeing today the advanced decline line for the NYSE starting to hinge downward. We've had these little pullbacks before on that uptrend on that channel there, but we were still seeing breadth actually expanding. Today we're actually seeing breadth kind of contracting here a little bit, and those mega cap names are just not able to offset maybe some of the smaller players within the index.
Okay. So the potential here for a two-way trade to emerge as those puts kind of creep into the equation sounds like we're having some now explanation for chop, and maybe we start thinking about some of those lower levels. So kind of walk me through the degrees of support below, KJ.
Yeah, so if you're kind of looking at the first one, the 5,700 level has been a key area that we've been able to hold here. Now, when you're looking at the actual positioning itself, there's still some calls that are still layered in there for farther dated out. So there could be more like a pen risk type of scenario that takes place rather than a full flush to the downside. So you would expect that maybe dealers would actually come in, kind of buy up that support, just like we saw last week. And so if we actually break through that, that's where you have a little bit of a scenario happening here, Oliver, where we start to gap down. Now the next level is 5650. The true area is 5645. That's really where the flows are going. But 5650 also has some complementary, put positioning that is at that level right now. So we kind of have obviously about a 20-point range in that area. You break through that, that's where we have a significant problem for this market, and we start seeing a little bit of a reversal. I wouldn't get too concerned about it yet. Volume for today has been, for the most part, light. It has been a boring market. We haven't had a lot of news or economic data to really push us one way or another. And I think we're probably just waiting until tomorrow to really make that decision as to if we're going to break to the upside or if we're going to break to the downside for the S&P 500 right now.
Okay. And then looking at Friday expiry, like is it pretty busy for this week, or how much kind of power is there behind the options flows?
I would say Friday, it's always going to be busy on a Friday, but not as busy as a Monday, Oliver. Actually, Monday is probably the bigger expiration for me right now. That's your end of month. And then we also have, from a mechanical standpoint, the ETFs, a lot of these passive ETFs that do have to rebalance because of whatever benchmarks that have been adjusted. That usually happens at the end of month as well. So the end of month is on Monday, September 30th. So that's actually where you could actually have Jem talks about, Vanna risk, right? Vol risk. That Monday could be your vol risk scenario. You could have a rotation. But I will say, though, too, be mindful. On Monday, you actually could see small caps perform very, very well, because usually when we see a small cap rebalance, the institutional changes within their portfolio can move prices higher. So from a broader index, S&P 500 NDX, maybe some choppiness, maybe a little bit of volatility. Maybe we could try to test some of these lower levels. But from a small cap standpoint, you might actually have some pretty decent winners there on that Monday and or Tuesday post the rebalance.
Okay. All right. Seems like we are still generally well supported until we start really cracking some of these areas of heavy kind of gamma exposure. But let's shift over. Russell, small caps, you mentioned it earlier. Taking a look at the little guy here today.
I have to, Oliver, it's really funny and nothing against anybody, but we had this big conversation once we had 50 basis point rate cuts. It was a risk on scenario in the market, which it was, and that small caps were just going to outperform, and it's going to be a new era for small caps. We're about to fail. It looks like the small caps are about to fail that FOMC move. That is actually bearish, and it keeps intact that upper end or that resistance zone sitting at around 2265, if you will. And so this is just a 3-month chart. If you actually go back, you can see that we've been basically rejecting this level for the most part all year.
Yeah.
But this is just one of these type of scenarios where you can get a lot of hype, but sometimes you can have people selling into that hype. And unfortunately, it seems like this is kind of that scenario that's taking place right now. You want to see it make actually a higher low to continue the upward trend, but that 2265 area has to be broken through. And it seems like we're just not able to do it at the moment. But Monday could give you that opportunity once again, if you get the right rebalancing taking place in the enthusiasm for small caps or some of these small cap names that are going to be entering certain indexes and portfolios, really catch the attention of media and some of these speculative traders out there.
Super frustrating trade for the small cap bulls to get the outperformance day after Fed and then give it all back and more. Big move in the small cap fade here, and also big rejection too. So yeah, the S&P really stands alone in its breakout for sure. So the Russell still looking like the weakest when you zoom out, and also, unfortunately, when you zoom in the last 5 days. Good point. KG, last thing real quick. Liquidity, quick thought on where we're at for S&Ps?
If you're looking at it on a relative basis over the last 3 weeks, it continues to actually increase, which is great. But this chart here, Oliver, is actually showing over the last year. And I actually highlighted what were the liquidity levels that we were seeing for the E-mini S&P 500 book depth, top level 3 level for the book depth here. And you can actually see we're pretty much almost half of what we were this time last year. So there's always this question of, okay, well, it's a holidays, it's seasonality, it's this, that, and the other. But also, it's just the fact that we have a little bit of a lack of liquidity compared to what we saw last year. Now, granted, last year we did see a little bit of volatility to the downside here, but we have some ways to go in order to improve it. But it has been in a compressed range for the last 2 months that I think all of us need to be mindful of, especially when we have choppy days like today.
All right. Thank you for the perspective, Kevin Green. Good look at the fade in the Russell and a little bit of put action